It's that time where we take a look at our ag commodity trade and we invite in our special guest. This time it's Brian Hoops. He's with Midwest Market Solutions and he is based, of course, in Springfield, Missouri, where, Brian, according to Tim Ross's radar screen a little bit ago, it looks like if you haven't gotten rain, maybe you will get some today. What's the story?
Well, yeah, we got some last night, some pretty good showers, and looking kind of cloudy. Looking out the window, and it's a little dark and overcast. So very, very possible we're going to get something.
You and I have talked quite a bit over recent weeks about that extreme dryness in northern parts of Missouri there, and that has really shown up in that drought monitor here lately. It looked like pretty heavy rain through the northern tier of counties or two in Missouri this morning, but is it going to be too little too late to help really increase the crop very much?
Well, it's interesting that you ask about that because there are producers in that area, that neck of the woods, that are actually baling up corn stalks and bean crop right now. They, instead of combining it, they determine the best value would be to get it into the feed rations, and so it's definitely going to be too late for that crop. But there's certainly a lot of it has turned already. I did drive through there recently, and a lot of it has turned into maturity. So the corn crop, it'll be too late to help. Some of the soybeans that are double cropped, where they've combined winter wheat and they planted soybeans, that's certainly going to help a great deal. This rain shower that's moving through is just a real perfect time frame.
So as they say, the farmers are going to walk it off of the field, if that's the case, in the form of feed ration. Let's take a look here at our current market action here. Brian, corn first. Corn kind of softened up after the overnight trade was over. It was higher overnight by a little bit. We had the corn rating, the condition rating, declining 1 point in the good to excellent at 71%. Soybean rating went down 3 points. We'll get to them in a second. September corn down a penny right now at 370. December down a penny as well. In the soybean market right now, you have your September contract currently trading a dime higher. We're at 8.92 3/4 per bushel, and November now 10.5 higher at 9.04. So it is back up above that $9 benchmark there. And the wheat trade, we've been talking about this here in the last hour or so. Dramatic turnaround here, Brian. We had it sharply higher overnight, and then it's like the bottom fell out, and we have September Chicago wheat now at 567. Well, that's down 7.5 from our close yesterday, and it is now almost 20 cents off its earlier overnight high. What happened to the wheat trade here?
Yeah, and the wheat's kind of been the driver of the corn market. When we've been higher, it's pulled the corn up along with it. The wheat futures, I think everybody knows that we're not able to export a large amount of our wheat. We're going to have to rely on supply issues to give us a rally in the wheat. A lot of our clients are telling us with the rally that we've had, they're going to be looking at planting new crop wheat, and I think we're going to see a pretty big increase in acres. Some of the harvest that's ongoing in the spring wheat belt are offices up in Minnesota and North Dakota reporting 75 to 80 bushel spring wheat, so some outstanding yields.
Okay, on the Kansas City market, we have turned lower there as well. We have the September down 4 3/4 at 581 1/4. Even Minneapolis wheat, where now we are starting harvest activity, September down 3 3/4 at 624 1/2. Cotton market had been higher, and it is showing December down 81 points now at 87.59 cents per pound. We're talking with Brian Hoops, and Brian, we'll bring you back here in just a moment and talk about our cattle and hog market action when we come back. We were talking about our crop conditions on the corn and soybeans. I wanted to point out the cotton condition rating as well. And here's a closer look. The key producing states in the U.S., Texas went down 3 points in their good to excellent rating, back down to 21%. 49% rated poor to very poor. Georgia dropped a point to 70% good to excellent. Mississippi down 1 at 68%. Alabama down 2 at 83%. And North Carolina, that's not a misprint. It went up 12 points last week, and that was a big jump all by itself in the eastern part of the country. Wanted to point that out. Brian Hoops rejoins us. He is with Midwest Market Solutions out of Springfield, Missouri, and we're talking about our livestock trade now. Brian, let's dive into the live cattle market here. They cannot seem to get much traction here. We had a limited cash cattle trade that developed yesterday in Nebraska, and it was a little bit softer than the trade we had the day before. October live cattle now going in reverse. They're down $1.10 today at 110.45 per hundredweight. That's $1.50 off our earlier high. December down to 127 now at 113.95. On the feeder cattle trade, We now have the August contract down 227 at 149.58. And now you have the September down 243, quoted at 149.42 per hundredweight. So that one there is about, what, $2.50 off of its earlier high of the day. Why the weakness here in this cattle market here this morning?
I think the downside is being led by the feeder cattle market. We've talked in the last couple of weeks that I think this market has topped out for the summer and starting to work its way lower. The demand for feeder calves, I think, is going to decrease as we go through August and September as our prices for hay, our prices for corn have all steadily increased. And with that increase in prices, that's going to mean just less demand for our feeder calves, less price appreciation in the futures market, and we're likely to see this market work lower here, I think, for a while. We've probably reached some of the longer-term objectives in the mid to upper 150 range for feeder cattle, and I think it's going to drag the live cattle market lower. In addition, last week our weight increased by 5 pounds. That adds more tonnage to the market, and that's going to create, a near-term support for the cash market, but longer term it's going to be bearish for our cattle prices.
After contract lows last week, the hogs are trading a little bit higher today on the lean hog market right now. We'll go to the live quotes here in Chicago. It looks like we have the October contract now trading 68 higher at 50.90, December 73 higher at 46.18. Can they build on this, Brian?
Well, they sure need to. We're very cheap on some of those deferred contracts. The August contract just can't get anything going. It's $21, $22 below where July went off the board, and October and December seems to have found some sort of a low, but just can't get much of a rally. This is an inside day compared to yesterday. Yesterday was an inside day compared to last Friday when they had the reversal. So we really need to see something technically to push this market higher. Fundamentally, we've already priced in some big discounts in the deferred contracts.
All right. Thanks, Brian. Good to visit with you again. Brian Hoops of Midwest Market Solutions. He is in Springfield, Missouri.